Investors are fleeing the financial markets and repositioning themselves while they'll still have a chance because another excruciating stock market crash is imminent. Following lower than anticipated corporate earnings projections, a significant sell-off recently gained momentum. However, since the Federal Reserve announced its third consecutive 75 basis point rate hike and hinted at a steep path of rate increases in the months ahead, things have become noticeably more tumultuous. In light of this, the S&P 500, Nasdaq 100, and Dow Jones experienced significant losses and entered the bear market after declining 20% from its peak, respectively. Wall Street experts and strategists warn that there may be much more chaos in the coming days and label anyone who thinks the market will recover as being simply insane. According to some of the most brilliant minds in finance, we should all get ready for a major shock that will impact not only stocks but also businesses, households, crypto markets, and the entire global economy. Today, we're going to address that. Welcome to the Financial Flow. Please like and subscribe to our channel and turn on notifications to stay up on our latest videos. The Federal Reserve explicitly warned Americans in September that as it keeps raising interest rates to combat inflation, they should brace themselves for a severe housing correction, higher unemployment, and an economic downturn. The worst growth shock to hit the global economy since the financial crisis is currently about to occur. Some market participants, however, continue to believe that the stock market will perform well throughout the rest of the year and in 2023, despite the obvious warnings. Despite the losses, estimates for how much profit S&P 500 companies will make next year seem wholly out of touch with our economic reality. In August alone, the S&P 500 plunged by 11% and the Dow fell 9%. Wall Street's optimistic predictions for corporate profits do not take into account the fact that even the biggest companies in the country are experiencing difficulties due to slower business activity and falling consumer spending. The economy is still being severely damaged by inflation, and the worsening profit outlook means that those who are overly optimistic are about to lose money. Bloomberg reports that Wall Street analysts expect the earnings per share of S&P 500 companies to reach $229 in 2023. That is to say, even though the Fed threatened to start a recession and promised to keep raising interest rates, some investors anticipate a 20% increase in stock prices. The portfolio manager at the hedge fund, however, asserts that these players are about to get bitterly disappointed. Even if corporate profits don't fall sharply, but instead just return to a healthy level for 2019, that's still a far cry from where the stock market is currently. The current market risk is that earnings per share normalize to the pre-COVID level, which is estimated to be around $160 per share. In other words, the expert predicted that another stock market crash of at least 40% would occur if profits return to being in line with earnings. Numerous businesses that relied on low-cost debt or a lot of liquidity to survive will face a harsh awakening as interest rates continue to rise. And that implies that profits, a crucial component of how a company's stock is valued, are on the verge of a catastrophic decline. Large companies like Amazon, Walmart, Target, and Ford all lowered their earnings projections earlier this month, citing ongoing supply chains issues and rising operational costs. On the basis of the weakening global economy, FedEx lowered its guidance for next year after reporting poor earnings a couple of weeks ago. According to Business Insider, following the announcement, the company's stock decreased by 24%. We're going to witness a disastrous chain reaction as soon as investors realize that there are a large number of businesses experiencing financial difficulties. Wall Street's current carnage is likely to spread to other financial industry sectors, and even an effect on the middle-class finances in America. According to Todd Bubba Horwitz, the recent stock market decline contributed to the crypto market's meltdown, which has cost investors $240 million so far. Currently, the Crypto Fear and Greed Index is edging toward extreme fear, and higher rates are destroying what's left of the American middle class, in addition to continuing to crush stocks. Some people are making an effort to avoid the hyperinflation that is about to occur. According to Horwitz, the overall crash in these equity markets should be between 50 and 60%. Anyone who examines their own financial situation can see that it is a recession and that they are watching their spending. On a related note, the financial crisis of 2008 recently alerted us to the fact that by the end of 2022, the S&P 500 will have undergone a significant correction, causing significant pain for market participants with debt-ridden companies and American households. The S&P 500 can fall by at least 30% in any recession. Predicts that the upcoming crash will be much steeper as we experience a truly hard landing. As interest rates soar and debt servicing costs soar, the ongoing recession could be long and ugly, resulting in the demise of numerous institutions, households, corporations, banks, shadow banks, and nations. An increasing number of market titans are becoming bearish on stocks in the coming months as a result of the unsettling outlook. Other experts have all cautioned that further decline is unavoidable in recent days. According to a recent expose by insider Ray Dalio, the head of the biggest hedge fund in the world has warned about two potential outcomes that stocks may soon experience. The first is the continued increase in yields brought on by higher interest rates. He explained that riskier assets like stocks are less alluring due to elevated yields in risk-free assets like treasury bonds. The second blow is the economic harm brought on by the decline in corporate earnings, which, in his opinion, will continue to fall. And I quote, "I do think that as you raise the interest rate to what is appropriate, competitive nursing will drive it lower, which will then also hurt earnings and the economy." Jeremy Grantham, a renowned investor, sugarcoated the current state of the world economy. Central banks all over the world are implementing the Titan policy to stop the price spiral. Given the valuations were 2.5 standard deviations outside of their average, this moment in global economics appears to be more dangerous than even the madness of the housing bubble of 2007. In addition, the S&P 500 could lose more than half of its value. Grantham emphasized that stocks were experiencing their fourth super bubble in a century, and that all historical precedents indicate that things are only just beginning to get worse. People believe that things will get worse before they get better, and that worse is still to come. However, it does highlight the fact that our economic and financial situation is dire and that there will soon be a day of reckoning. Additionally, Scott Minute had stated that stock valuations are still too high, despite the recent corrections. On September 8th, he published a prediction that, by the historical standards, stocks would decline another 20% by mid-October. Stocks have decreased 12.2% since that time. Additionally, Minard cautioned investors against purchasing stocks until the Fed has finished raising rates. The truth is that no one really knows how much higher rates will go or how long the Fed will keep raising them in order to control inflation. So eventually, this will all end in tears. However, the senior correspondent went on to say that whether that results in a short, we are aware that whatever is coming won't be good for corporate earnings, whether it be a downturn or a recession. Since 1960, earnings have decreased by an average of 31% during recessions, and the longer it is, the worse economic downturn and consequently the profit slump, the worse it will be for stocks. In other words, the pictures of the sweaty traders and the screaming red stock market that we've seen represent the beginning of the end. Thanks for watching. Don't forget to leave a like and subscribe to our channel for more content like this. Have a good one.